Hi traders, this is Riddhi from Team 51. In this video, we are going to solely focus on understanding the MACD indicator better. This is because MACD happens to be a very important indicator with very many uses in a lot of strategies. Let's start by understanding MACD in detail. MACD is, as the name suggests, based on moving averages. It's called the Moving Average Convergence Divergence Indicator. Now let's break it down into its components to understand it better. A MACD is composed of two EMAs, the shorter EMA, shorter term EMA and the longer term EMA, typically the 12 period and the 26 period EMA. The MACD line is essentially the difference between the 12 period EMA and the 26 period EMA and focuses on the crossover between these two EMA lines. Therefore, if the 12 period EMA minus the 26 period EMA is positive, that is when the 12 period or the shorter term EMA crosses over the 26 period or the longer period EMA, the MACD becomes positive, is greater than 0 and indicates an upward momentum. As you can see this line here, this is the 0 line, and since MACD is an oscillator, when the MACD is positive, once again when the 12 period EMA minus 26 period EMA is positive or above 0, it indicates a bullish momentum or an upward momentum. On the other hand, when the 12 period EMA crosses below the 26 period EMA, the MACD is below 0 or negative, and this would indicate a bearish momentum or a downward momentum. This, along with other indicators, can be a great cue as to whether you want to enter or exit a trade. Now, the second component of the MACD indicator is the signal line. The red line here indicates the signal line. The signal line is simply the 9 period EMA of the MACD line, and the purpose of creating that is to get a more precise view of any new trend starting. It follows a simple crossover logic. When the MACD crosses above the signal line, it indicates a bullish crossover and a buy signal. When the MACD line crosses below the signal line, it indicates a bearish crossover or a sell signal. Let's move to the third component, which is very closely related to the MACD and signal line crossover. It's the histogram that you see here. Now the histogram simply illustrates the difference in value between the MACD and the signal line. So at points where the MACD and the signal line are at the same point, the histogram will have 0 value. When the MACD exceeds the signal line, that is when it crosses over the signal line, the histogram becomes positive. And when the MACD line crosses below the signal line and the difference is negative, you will see a negative slope on the histogram. Now, how do we use this in a strategy? Simple. When the slope of the histogram turns from negative to positive, it can be an indicator that the trend is now turning bullish, and therefore you may take a buy position. At the same time, when you see that the histogram slope is turning from positive to negative, it may indicate that the trend is turning bearish, and you may now go ahead and sell your script. To understand this better, let's look at this chart here. In this chart, as you can see, when the histogram turns from negative to positive, the stock may be entering a bullish territory, and it may indicate that you have a buy signal here and you can enter the trade. And at this point, when the histogram turns from positive to negative, you see that the MACD line is crossing below the signal line. It indicates a sell signal. Obviously, like any other indicators, MACD also has its own disadvantages when used all by itself. One is that the histogram make whipsaws, that is very small periods of ups and downs which do not indicate a particular trend. The second is that because the MACD is based on moving averages, it is a lag. It has some amount of lag. Now let's try to create a strategy using MACD on 5-1 core, but before we do that, let's illustrate what exactly we're trying to achieve. This is an actual chart of Reliance Industries. We want to use MACD in the form of crossover, so we are going to use a bullish crossover to buy the stock and a bearish crossover to sell the stock or exit the trade. So let's see, this is where the blue line or the MACD line is crossing over the signal line. So this is where you may enter a trade and buy the stock, and if you go farther you would see that the MACD line, the blue line, is crossing below the signal line, and this is the point where you may exit, and you are capturing a profit while holding the stock until here. So there will be a lot of such opportunities over the course of our backtesting period and over the course of the future as well, because we are looking at an algorithmic trading strategy wherein you put in your order and the strategy gets deployed automatically once your entry and exit conditions are met. Let's try that on 5-1 core. Go to strategies, click create strategy. Now this is a template based strategy creator. You don't need to know any coding here. Simply add your scripts, time interval, entry and exit conditions and other details. You can use over 120 technical indicators here, and also there's no limit on the entry and exit conditions. Let's start by adding some scripts. So I'm going to add Reliance, I'm going to add ONGC, alright. My time interval would be 1 hour, but you can choose anything you like. I would enter the trade with a buy position of 100 quantities of each of these stocks if my entry condition is met. Entry condition being a bullish crossover of MACD. This is the signal line MACD ending with S here. My exit condition would be the opposite, that is a bearish crossover where my MACD crosses below the signal line. Alright, it's important that you add a stop loss in order to manage your risk. Whether or not you add your target profit is up to you. A lot of times people only add a target profit as an exit condition. In this case, I'm just going to leave it blank, but you can always come back, experiment, see how your trades react if you add a take profit as well in the exit conditions. Also, it is advisable to try different periods for backtesting so that you don't have any sort of biased results or with any one period of data. That's it. Just name your strategy and hit play, save and backtest. Alright, so we're getting a decent rate of win with Reliance and ONGC, and also a decent PNL number. I may not want to go ahead with Asian Paint. Okay, not going ahead with Adani either. So I'm going to go back and edit out these two scripts that I don't want to go ahead with. Okay, let's go ahead and click deploy. Before you hit deploy, you also have the option to paper trade your strategy. It is recommended that you do so because this shows how your strategy is going to perform in an actual live market environment, but without the use of any actual money, which means there's virtually zero risk. Once you're satisfied with your paper trade results, you can go ahead and take your strategy live by using a broker of your choice and clicking take live. Now when you go on the dashboard, there's a section named Discover. Under this section, we have a lot of ready-made strategy templates for you that you can experiment with. You can customize using your own values for different indicators. Also, if you want to try the strategy we just illustrated right away, go ahead, click on the trial link in the description of the video, and do subscribe to our channel for more such trading strategy videos. We hope you liked the video, and we hope that you keep coming back for more videos. Thank you.